Sure. Well, I'm Daniel. I'm a second speaker at Polyprep.
I'm Noah, and I'm the first speaker. Poly.
I'm Ryan, and debate for Corona. And Sreya is studying for finals still, so.
Senior problems.
Yeah. Well, okay, let's talk about cases maybe.
Cool. We negate, resolve, the U.S. federal government should prioritize reducing the national debt over promoting economic growth. We observe the most important aspect of the national debt is not the size itself, but how large it is compared to the size of the economy. As long as economic growth outpaces debt growth, the U.S. will be able to pay down the debt. This will continue to happen for two reasons, and the first is that borrowing costs will go down. Interest rates on Treasury bonds have been falling for decades and will keep falling, meaning we can simply borrow to make interest payments, and the ratio of debt to GDP will still decline. That's important because lower interest rates makes it much easier for the U.S. to finance the debt. David Wessel of the Brookings Institute explained in 2019 that if interest rates on federal debt were just 1 percentage point lower during the next 30 years, federal debt would be smaller by more than 30% of GDP at the end of that period. Second, the economy will grow. Historically, economic growth paid down the debt, like how strong economic performance after World War II led the debt to GDP ratio to plunge. The U.S. will soon experience a new period of massive growth. Seth Redmore at Lexalites writes in 2017 that artificial intelligence will drive unprecedented economic growth, nearly doubling GDP levels in the next 20 years by increasing productivity. AI may be the single greatest economic growth factor in history. This will make paying off the debt much easier. Thomas Frank of CNBC writes in 2017, if artificial intelligence expands its capabilities, then dealing with debt could become a lot easier. Tireless robots would make our economy more productive, which would boost economic growth, giving us more money for paying down the debt. Thus, there is no need to prioritize debt reduction in order to achieve manageable debt levels. Trying to do so would only increase economic pain.
Sure, yeah. So our con, I liked our con a lot because I thought it was strategic in that we didn't have to win that many things to win most rounds. The structure was kind of unconventional in that we had this pretty long overview, this observation. We don't really have that in cases usually. But we sort of realized in con that if you're on con and you win that debt doesn't matter, then you basically win the round. And if you don't win the debt, if you win that debt does matter, you kind of lose the round. So we had to win that. So we put a lot of emphasis on winning that in the case from the outset.
Yeah. I think that's something that's certainly important, like goes for this round, is that, Ryan read a lot of different responses in rebuttal, but I was just able to frontline in summary through one of these reasons why debt doesn't matter, and that was the only front line I needed to, we needed to win our case. Which is, I think goes in general for case writing is you want to write cases where you have the easiest path to the ballot, doing kind of the least amount of things, explaining the medical ideas.
Randall Ray, a professor of economics at University of Missouri, Kansas, writes in 2010 that with the exception of the Clinton surpluses, every significant reduction of the outstanding debt has been followed by a depression. Not only do entitlement cuts create the conditions for an economic slump, but they also make it more difficult to climb out of one. Robert Rubin of the Washington Post writes in 2017 that these programs serve as automatic stabilizers during an economic downturn. In a weak economy, as people lose more income and become eligible for federal benefits, the programs expand, putting more money in people's pockets. People then spend that money, increasing demand and helping the economy recover. If the federal government cuts entitlement programs during or right before a recession, it would be shooting itself in the foot by weakening that safety net. This was confirmed in the last recession when the U.S. government strengthened these programs, but European governments made deep cuts to try to lower the debt. The U.S. economy has recovered much faster because it supported these programs. Francis Coppola of Forbes explains in 2018 that in Europe, the result has been a decades-long slump. Some countries in Europe still have unemployment in double digits. An entire generation has been thrown on their scrap heap in the name of balancing the books. Thus, we negate.
I think the other strategic thing about the case is the impact, like a U.S. recession that we talked about, and especially a recession that you can't get out of because you can't stimulate or stabilize the economy. That seemed like the best impact that you could have because it linked into and outweighed pretty much every other pro impact, which is also what happened in this round. So you want to design cases that from the outset set you up that you only have to win your case. And if you win that case, then you win the round.
We we affirm resolve the United States federal government should prioritize reducing the federal debt over promoting economic growth. Our sole contention is the developing debt disaster. The developing world is facing an impending debt crisis. More 18 of the Atlantic Council writes that both Turkey and Argentina are set to experience a recession, and if no action is taken, these two countries could default on their debt, triggering widespread investor panic. Beyond these two countries, Zumbra and 18 of the Wall Street Journal writes, the risk of a global crisis is rapidly rising, as over 45% of low-income countries are at a high risk of default, up from just 25% from 5 years ago. With comparatively poor levels of infrastructural development and high social stratification, these defaults would push millions into poverty. For example, NERD 14 of the Leibniz Institute for Economic Research articulates that when a similar crisis broke out in 1997, the living standards of millions plummeted and countries lost years of economic development in an instant. At the heart of this looming disaster is the American debt crisis. When America borrows more money, it does so by selling more bonds. Patel 18 of the Financial Times explains that to fund the rapidly increasing deficit, the American government issued over $1 trillion of government bonds in 2018, flooding the global bond market with American treasuries. This flood of treasury bonds has created the developing world's debt catastrophe in two ways. First, by reversing investment flows. Compretta 18 of the American Enterprise Institute emphasizes that just as American debt has exploded, so too is the supply of U.S. Treasury bonds. To global lenders, U.S. bonds represent the safest asset on the market, meaning with more American treasuries available for purchase, the supply of lenders for emerging markets has gone down dramatically as they shift to buy more U.S. bonds. Indeed, Patel 18 of the Financial Times continues that already emerging economies are losing over $5 billion a week in investment due to the high levels of U.S. debt. Problematically, Edwards 18 of Business Insider writes that as the global supply of capital shifts away from emerging markets and towards U.S. Treasury bonds, it becomes impossible for markets like Turkey to find the lenders to finance their debt, pushing countries to the brink of default. Second, by amplifying dollar-denominated debt. Hicks 18 of U.S. News writes that when the government issues more bonds to pay for the federal debt, interest rates on treasury bonds skyrocket because the demand for loans rises. Indeed, Sebula 14 of Jacksonville University analyzes rates in America from 1971 to 2012, concluding that for every 1% increase in the U.S. deficit has resulted in a 0.21% increase in interest rates on treasury bonds. When interest rates in America rise in America, they amplify the debt problems of emerging markets. Bartonside 18 of Bloomberg explicates that over 2/3 of debt held by emerging markets is dollar-denominated, meaning that these countries are borrowing in dollars, not their own currencies. Unfortunately, Sasser 18 of the Foreign Affairs magazine explains that higher U.S. interest rates cause lenders to hike the interest rates on bonds in emerging markets since they would need a higher return of investment in order to compete with the safer American treasuries. Overall, 2011 of the International Monetary Fund quantifies this effect, finding every 1% increase in the debt-to-GDP ratio in the U.S. results in a 0.1% increase in interest rates in emerging markets. Higher interest rates are devastating to these economies. Richter 18 of Business Insider writes that through 2025, emerging markets will face $2.7 trillion in U.S.-denominated debt that has to be paid off. So higher borrowing costs would make it significantly harder for countries to pay off its debt and heighten the risk that these countries default. By prioritizing the reduction of federal debt, the American government would necessarily borrow less, putting fewer treasuries on the market. A vote for the app prevents investors from fleeing emerging markets and drives down interest rates, thus making debt much more manageable for the world's most vulnerable countries. Thus, we affirm.
Our case was structured pretty much the way we wrote cases all year, which I would describe as having like a uniqueness scenario that also sort of is your impact. So in this case, what I mean by that is like uniqueness is just like, what does the status quo look like? And what is the status quo trending towards, or what is the status quo like trending away from? So I guess like a good example of this that wasn't in this round per se is like on the unclosed topic, when teams would read, well, we're going to war between US and China inevitably now, or we're de-escalating tensions now, and affirming or like negating sort of disrupts that. I think in this case, the case is more like if we don't act now, there's going to be some developing nation debt disaster. And our argument was just when you affirm, then you sort of stop that. And I think that the reason these cases to us were strategic on every topic is, oh, I'm not sure if I cut out there.
Yeah, you're good.
All right. So I think the reason that uniqueness scenarios in general are pretty strategic in a way that I think maybe some PF teams are underutilizing is in terms of how they frame turns against your case. So if, for example, and I don't think this happened in this round, but it happened in some of our rounds on the topic, teams would stand up and say like 4 or 5 reasons why when you affirm you caused a developing debt disaster. The response was always, well, that doesn't matter because the developing debt disaster is inevitable, which came from our uniqueness at the top. And that sort of makes it like that sort of link comparison between our link and like disads or turns made it much easier for us to win the case. The second thing is the thing Daniel said, which is you always want to write cases where if you win your case, you win the round. Obviously, wasn't the case in this round, but in general, we wanted to read a case about the developing nations because the developing nations are much easier to weigh than, for example, poverty in the United States. Because, for example, in the price control topics, when like Bronx OS always read like that 4-prong overview about like why developing nations outweighed, it's like there's just more poverty, so a $1 increase and decrease matters a lot more, things like that. And I think then you just have where we went wrong on this front is we needed to respond to like when Daniel and Noah tried to link into that analysis and into developing nations, and we needed to shut that down to make our case still come first. But otherwise, I think those were like the 2 considerations with our case, just uniqueness and like the impacting. I don't know if the round is posted online, but the case was basically about crowding out private investment in America and hurting American economic growth. We felt that after ASU, the rounds where we had the most trouble were when the other team was linking into recession and winning some sort of global impact, and we weren't able to like link into that quite as well. So we wanted to find a case that widened on scope. So we just sort of like researched the effect that debt has on other countries. It was helpful that we heard a couple teams that did read an emerging markets argument at ASU, which meant that we were exposed to it. And so we sort of just had to look into we ended up reading different links than we heard at ASU. But I think it is a good idea if you have multiple tournaments on the topic, like watch out rounds or like listen to your opponents in out rounds, because people do read interesting things that you can sort of build on for your next tournaments.
Let's start at the top. A big observation. If we win our case, we win my opponent's case and also the round. The reason why is because cutting entitlements, as we have explained, destroys the social safety net of America, and A, makes recessions and depressions more likely, but B, also makes it harder to climb out of recessions. Remember our Ray evidence. Ray finds that 6 out of the last depressions were immediately preceded by debt reduction, because when you cut entitlements, you cut the spending of the poor, they lose their jobs, they lose that safety net. But our Washington Post evidence furthermore indicates that when you cut automatic stabilizers, it becomes much harder to climb out of recessions because no money is being injected into the economy. Here's how that outweighs my opponent's case. My opponent's case is entirely about economic recessions and harms in the developing world. Well, recessions and depressions in the US spill over into the developing world. In fact, the World Bank finds that the last recession in 2008 spilled over to the developing world to such a degree that hundreds of millions of people were forced into poverty. Not only does this link into my opponent's case, but it also outweighs their case on magnitude and time frame. Because you're comparing debt crises in isolated countries to a global depression that spills over to many other nations. But you're also comparing a short-term to long-term problem. Because even though the debt crisis in these countries may be bad, it certainly isn't long-term. As their example from 1997 explains, it sure harmed these economies, but these economies eventually recovered. However, a depression where we cannot get out of because there's lack of stimulus, we cannot recover out of, and is a long-term impact.
I didn't feel confident going in, like from my perspective, before I gave the rebuttal. I didn't feel very confident about the responses on my opponent's case, which is also bad if you're first rebuttal because you have to spend most time there. So I did something kind of unconventional, which is that I spent like a minute, I think, setting up our narrative on our case and weighing, and that I think sort of stayed us in the round, and that came in a lot of help later. Is that because we spent so much time with the weighing, it put our case ahead of theirs. And it shifted the burden a little bit. So it said, even if the responses I read didn't necessarily stick, even if they were going to win their case at the end, if we had the stronger story, and if our arguments outweighed their arguments, then we were going to do well. So yeah.
let's talk about their response to our case. They say that cutting entitlements are going to destroy the social net and cause a depression. I would say the longer we wait, the more entitlements we have to cut, which means that we are always going to come first, because there's a higher probability now that if we cut a limited amount of our budget, that it actually works and reduces the debt. We've seen instances of this. They give you their own example that when Clinton, for example, had a gradual cuts, you saw over the long term a surplus for 3 years, which means it's definitely possible. Prefer that over their Europe example because it's actually applied to America. Let's go to the top of my case. They give a few responses here. First, they say there's other historical problems. They say after the 2008 recession, these companies loaded up in debt, but that's the point. They've already loaded up in debt. There's no going back. All we can do right now is stop them from defaulting. The Zumbrun 18 evidence says that while 45% of developing nations are on the brink of default right now, it's not inevitable. We can stop the train from colliding if we stop the issuance of debt right now. They say we don't have a brink of impact, but this is our brink of impact. If we let the status quo continue, the issuance of debt is already driving up interest rates and leaving investment flows, which is why they're losing $5 billion every single week. Then they say 2 responses to our first warrant. First, they say that countries have other problems because of other loans and things like that, and because of commodity prices. But that's not true, because what Wilson 18 writes is that while this may have been true 10, 20 years ago, these emerging markets have shifted away from basic inelastic commodities and instead shifted to things like technology, which is why commodity prices aren't a problem anymore. Now all we have to do is ensure that they don't default on their debt. Their second response is that our first argument is about interest rates and contingent on interest rates. That's not true. Even if interest rates don't go up or go down, what happens is because treasuries are always safer, when the supply of treasuries increases, more capital is taken away from the rest of the global bond market, which is why emerging markets right now are losing $5 billion every single week. Let's go to their case. At the top, they read 2 reasons that the debt doesn't matter, both contingent on the debt to GDP ratio. The first is that the borrowing cost is on the decline. There's 2 problems here. First, PSEC 18 writes, if you look right now our 10-year treasuries are at a 7-year high because of the fact that our influx of debt under Trump's tax plan has driven up interest rates. And Sabula 14 says that in the history of America, when you analyze the actual interest rates and deficits and control for variables, which is why our evidence is better than theirs, we find that a 1% increase in deficits leads to a 0.21% increase in interest rates. While yes, it may be true that throughout history our economy is getting better, so there are decreases in interest rates, the problem is we are isolating the effect that deficits have. But then they say that there's going to be an automation boom. Let's talk about this. Even if there's an automation boom, our debt is growing too fast. Black 18 writes that our debt is rising 36% faster than our economy. Even if we double GDP by 2030, or in 2 decades, as they say, this is 36% higher every single year. Black says that this compounds itself, which is why economic growth has never been able to reduce our debts, even through periods when we have the productivity boom under the dot-com bubble. But more importantly, what Thompson 17 writes, that there isn't going to be an automation boom anyways, because investment is at the lowest level since World War II in technology. And the warrant for this is that he finds that this low level of investment is simply not enough to sustain an automation boom. If you want an automation boom, you vote for us, because the Japan Times writes that actually high levels of debt crowd out private investment as people shift their investment because of the fact that the debt takes in investment and soaks out capital from the private bonds. But go to their first contention and only contention about entitlements. Cuts are inevitable. What the Peterson Foundation writes that right now interest rates are rising and our principals rising leads you to higher interest payments. Code 16 says that in 10 years, interest payments are going to take up 99% of our budget alongside mandatory spending, which is why the Peterson Foundation writes that your choice is simple. You cut now at 1.9% or you wait 5 years, in which case the cuts rise by 21%. But they say that cutting spending is going to cause a depression. That's not true. What Mitchell 10 writes is that when government debt actually lowers economic growth because it drives up interest rates, preventing companies from having any access to private capital, which is why Sousa says a 1% increase in government spending lowers private investment by 1.8%, which is why Bocha 13 writes that our debt puts 11,000 people with less income every single year.
For the second rebuttal in this round, I think the things that sort of went well in the speech were one, I think I made the right decision to collapse on our first link immediately in the second rebuttal and frontline the first link and like the uniqueness and impact level. So I think in general, teams should frontline as the second rebuttal. They should, if they have time, frontline the entire case, or to sort of make the decision on what to collapse on earlier in the round and collapse and frontline, because then I think you, one, are able to give more frontlines because you have a longer speech, which makes it much more difficult for the other team to sort of win. It also makes first summary a lot harder because now in an already limited time constraint, they need to extend defense, but also frontline that defense first. So I think frontlining first in second rebuttal is strategic, and I think that's sort of indicative where most of the top second speakers sort of did that this year. The second thing is, I think, reading like less but more well-developed responses. I think I only put like 3 or 4, maybe 5 responses on their case total, but each one of them had like multiple pieces of evidence. Each one of them had like evidence that would like maybe like preempt responses they would make. So I think more limited responses, but better responses is always a better option than just reading like 12 to 15 responses. That said, I think there's a few things that I could have done a lot better. Like, I think the first is I should have immediately identified when Daniel spends the first minute of his speech weighing that that's something I need to immediately respond to, which I just blipped and did not do in second rebuttal, which later on in the round just made it a lot harder for us to play catch up, where they were just so far ahead on the weighing debate. The second thing I think is I sort of needed to frontline like more explicitly. I think there was a response in our first warrant that Noah and Daniel did end up extending that I like sort of implicitly frontlined, but never like signposted like this response to this response as well, or something like that. I think it was like my frontline was about like commodity prices, and it was frontlining the idea of like risky investments in developing nations. So I think that that's something else that could have gone better. But the primary thing, like if someone was doing a redo of the speech, is like definitely respond to the weighing, set up your own weighing. And like I think this rebuttal needed to address the weighing debate a lot earlier. Daniel, I don't know how do you do time allocation in second rebuttal? Because I think we do it a little differently.
You know, not well. Time allocation is something that I've always struggled with. I tend to be kind of top heavy. So I tend to structure my rebuttals first or second, but really second, as you start with a overview that gives your case narrative that weighs, is that's the most important thing. So at the top, then that's okay. Then you go to your case, and then you finish on their case. In terms of like the minutes, I mean, that sort of varies. I mean, you want to have like a minute at least, probably like a minute and a half on their case. But you do want to spend some time on your case.
I mean, you usually just go till you're done frontlining. Like
yes.
Yeah. Okay. I guess then we do it the same. Yeah. Our philosophy as a team has always been, if we win our case, we should be winning the round. That's how our case construction set up. We talk about weighing for like probably just as much time as we talk about blocks before tournaments. So I think in general, I would just frontline until I was confident that we were winning, if not the entire case, a portion of our case. Sometimes in the most extreme, there were rounds where I would spend 3.5 minutes just winning our case and weighing our case, and then maybe like 30 seconds, like 1 or 2 responses to their entire case. I think that only happened like 1 or 2 times the entire season. Like in general, the max I would go in a normal round was around like 2 minutes and 30 in our case, and then the rest of the time on their case. But I think like I almost always spent more time on my case than on their case in second rebuttal. That's also partly because I'm horrible at word efficiency. I think what I do definitely could be accomplished in 1:30. So work on word efficiency. I've always just been, that's been one of the things I could have improved.
Let's start off on entitlements. Remember that the reason that the debt is growing so much right now is because there is an increase in spending on entitlements. That means that if you want to significantly reduce the debt, you have to cut entitlements, and you have to cut them by trillions of dollars. That is bad because A, our evidence at the bottom paints indicates that just Social Security keeps 26 million people out of poverty, but B, we need to fund entitlement programs because they act as automatic stabilizers and get us out of recessions. Winning us this argument wins the round, because even if they win, then investors are pulling out of some companies. Remember that the Great Recession pushed over 100 million people into poverty. Therefore, if you do not have these automatic stabilizers, we will not be able to get out of recessions in the future, and as a result, the economies of developing countries will not only be much worse than the 100 million people because they can never get out of the recessions. That is on scope and magnitude far greater than their short-term impacts of like small debt crises. But let's look at their response. At the top, they say, let's look at their responses. They first say that interest rates are going down and that high debt causes higher interest rates. That is just simply not true. Over the past 40 years, the debt has gone up, but interest has gone down. And here is the warrant. It comes from Zoffer of Harvard, who explains that because the dollar is the world's reserve currency, there is an infinitely high demand for dollars. And for that reason, people always want to purchase more treasury bonds. As a result, our interest rates are incredibly low. This takes out all of their arguments about crowding out social programs in the long term, because insofar as we can just borrow more money, we will never have to do that. Then let's go to AI. What we say is that an AI revolution will cause massive growth that has never been seen before. It will cause our GDP to double. But then they say the revolution won't happen because we're at the lowest investment ever. But that does not make any sense. The economy has been growing for the second longest period ever. Clearly, private investment is good. But then on crowding out, we would argue that investment by the government is far better than private investments, because what Daniel explains in Cross, that investment by the government goes directly to the poor, while private investment mainly goes to stock buybacks. On their case, remember that it does not make sense for people to go to the developing world to buy U.S. bonds if they care about safe investments. If people are making unsafe investments now, they will still make unsafe investments, but if they want to make safe investments, they will do that anyways, and that is why we negate.
Yeah. So, so going into summary, like I said earlier, kind of, Ryan's second rebuttal, he's kind of underselling this, was like really, really good. Probably I think definitely the best in frontlining on any round we've had this year. Like when he was reading the rebuttal, I was like, shit, we're gonna have no responses on their case. Which that was like honestly the only time that happened this year. So that is where you kind of need to be flexible and need to accept that you are not always going to win defense on your opponent's case. So, we have been hinting at, you got to have a case, or even if you don't have a case, you have to spend the most amount of time that you can making sure that you win what you can win, and that what you do win is the most important thing in the round. Because what me and Daniel realized in the second half of the round is like, look, it doesn't matter if Ryan has read the best front lines and they're going to win their case, because as long as we win the weighing, we don't have to spend any time on their case. So then what it became strategic for me to do, and which is why I spent like 155 on our case, was because that's all we needed to win. And I just made sure. The first thing that I did was I just extended the weighing that Daniel read, or I think I did, and maybe read some new weighing. But most importantly, I just made sure that we won the weighing, because once we won the weighing, then Shreya can do, whatever she wants in their case in second summary, but as long as we win the weighing, that doesn't matter. Then all I had to do was make sure that we won the overview, because if we did that, again, then that took out, like Ryan read a bunch of different responses, but that took all of them out because, that's why this overview was so strategic and we won so many rounds off of it. I guess, like Daniel alluded to, that's when I read the Zoffer stuff about infinite borrowing, which, just kind of the last extra analysis that we needed. And then the other thing was they also just read this turn, which didn't really end up mattering so much. But yeah, if you aren't going to, the point is, if you are not going to win their case, which you can't always, you got to win your case and you got to weigh, and you have to spend time doing what is going to make you win. Don't just think like, oh, I need to read defense because I need to read defense. If it's inefficient for you to read defense and you're not going to win their case, then don't read defense.
No, I agree. Like, I think Noah does pretty much exactly what he needs to do in this summary. Like, I agree. Like, Ryan sort of screws up the weighing responses in second rebuttal. I think Polly comes out pretty far ahead because of that. Like, conceding that the U.S. recession wouldn't be able to we wouldn't be able to come out of a U.S. recession is kind of a huge problem for them. So I think Noah does pretty much what he needs to do. Pretty good case extensions. I think the reason that Corona, I think, is able to go for these turns is Noah does a pretty good job at responding to the turns, but I do think there's a couple of responses that need to be implicated a little bit more. I think the public-private comparison, especially I notice, probably could have been just a little bit better. The warranting is there, and it's kind of a ghost extension of what Danny does in the second cross, but I think it probably needs to be a little bit better. But overall, I think like Noah said, he does exactly what he needs to do strategically, extends the weighing that Corona's behind on.
Everyone ready? I'm going to start on weighing first, and then our case theories. So, they may say that they link it to 100 million lives, but we would say that we first outweigh on time frame, because maybe there's a recession in 5 to 10 years from now. But right now there's a crisis in action with emerging markets, and the only way to act is by affirming, because we can cut the debt now and pass fiscal stimulus later, but if these countries default, then millions are affected. First, Zumban says that over 45% of low-income countries are on the brink of default, and NERD says that if these two countries do default, millions will go into poverty. But then they say it doesn't make sense. Safe investments or there's different investors who invest in safe or different assets. But we would say that they diversify their portfolios, because if there's an increase in supply and an increase on returns on these safe assets, then they pull out of emerging markets and shift back to the U.S. And history is on our side. Capretta says that if the supply of U.S. Treasury bonds increases, then the lenders for emerging markets decrease as they shift to the U.S. Patel says these emerging markets lose $5 billion a week, but then Edwards also says that if this global supply of capital shifts, then they can't find lenders. And that's especially bad because debt defaults are uniquely happening because of America increasing its debt, and they also can't pass fiscal stimulus to help get out of the recession because their currency no longer has value. At that point, go to their case. First, they say they can borrow more money infinitely, but they have a fixed capital pool. They're only interested in specific resources are limited. But then Sebula prefers Sebula, who says that a 1% increase in deficits leads to a 0.21% increase in interest rates, and that's better evidence because it controls for all variables and shows that history actually shows that an increase in debt has increased interest rates. But then Pazak also says that our treasury yields are on a 7-year high and our interest rates are increasing. But then Thompson says that specifically to automation, that our evidence is specific to tech investment and it's too low, so it won't lead to a boom. But then Japan Times says that if you want to create automation, you prefer our side because investing in government bonds crowds out private investment as people don't buy private bonds. At that point, remember Clutter and Neville, you only have to cut 1.9% per year now. If you wait just 5 years, that's 21% higher. So for those reasons, we urge an affirmative ballot.
I actually think that on our side, Srey and I maybe made strategic errors in the summary that that sort of lost us the round. So I think I'd rather talk about how the speech could have been improved in terms of strategic considerations. I think that Srey and I needed to recognize how far behind we were on the weighing debate, which I think we sort of undersold the weighing that Polly was doing. Whether that was just because of nerves or the fact that we weren't comfortable collapsing on, because we've been collapsing on our case pretty much all year, because usually we weren't so far behind on the weighing. I think we needed to recognize that this round was slightly different and we needed to go for something else. So I think that the best thing we could have done in this speech is, rather than try to go for our case when we are behind on weighing by so much, is to just collapse on turns. I think we undercovered Noah's overview about the debt doesn't matter with the Zafir evidence. I think if we had put 3 or 4 responses on it and just solidly won that, we also win because that was, as Noah said, his front line to all of the turns. We would also be able to win these turns that we sort of go half-heartedly go for, but we don't commit to. I think if we had committed to the turn about automation and committed to the turn about cuts being inevitable, it would have been much more clear route to the ballot for us than trying to win our case when we spent a minute, I think, and 20 seconds on our case in both speeches. And since we were behind on weighing, it basically just didn't matter. So I think in general, like Noah said, be flexible. There are rounds, even if there are only 2 all year or 3 all year, there will be rounds where you are just so far behind on weighing or so far behind on a piece of defense in your case that it is just more strategic to just kick your case entirely and go for turns. I think that depending on the panel, you'd need to explain it a lot better. Obviously, I think in front of a lay judge, it's harder to kick case and go for turns than it is in front of a really technical panel. So I think that can be readdressed just by explaining why that turn wins you the round better.
Okay, yeah. So then in terms of second summary, I think Srey's case extensions are pretty good. The story is there. I think the link that's undercovered is the first link in rebuttal. But like has been kind of the theme of this round. I think they just Soraya doesn't quite do enough to like get them back into the weighing debate, and then like sort of has some blippy extensions of the turns, but it really isn't enough to like vote on. And there's no comparative with this like what cuts cause recessions to be infinite kind of stuff. So there's just like no application of the turns in terms of the impact debate.
I think. Oh no, you can go ahead.
I guess just something to add, which Thomas and Ryan have been saying, is that in every debate round that you're ever going to do, the other team that you're debating is going to make a mistake. And what your job is to kind of listen to those mistakes and find out what they are. Like the mistake that Ryan made in second rebuttal, like they have said, was he didn't spend enough time on weighing. The mistake that I made in first summary was I didn't frontline the turns well enough. So the team who wins the round is the one who is better keyed into what mistakes the other team is making. And you just have to be as vigilant and flexible as you can in rounds to find where they are, because they're always going to be there, no matter who you're.
Yeah.
So final focus, like the rest of these guys said, what I tried to do my final focus is I saw an opportunity, which is that we were ahead on the weighing, that's our strength, and I saw a weakness, which is that we were sort of weak on these turns. Like we really needed to make sure that they couldn't win on the turns. So I made sure in final focus to spend a lot of time clearing up the story, really selling the judges on it, and then also using that story to explain why my opponent's responses didn't work, like why, like why there was not going to be any private, or why private crowd out didn't matter because governments could spend better, stuff like that. I don't think there's so much new analysis I got in this focus. I think the rest of the people said that when we talked about summary. I will say this one thing, which is there's sort of an inverse relationship between final focus and summary, which is that the harder your summary, or like the more work you do in summary, the less work you do in final focus, right? Like the better the summary is, the easier the final focus is. Because if the summary, does all this stuff like great weighing and great frontlining, and they have that analysis, and all the final focus has to do is go up there and repeat it and maybe flesh stuff out a little more. But if the summary doesn't do that, then it becomes a lot harder. And at a certain point, judges just won't vote on stuff. So yeah, that's what I'll say about that.
Yeah, I think final focus might be the least important speech of the round if the summary is good at all. I think you either I think that in most rounds I've watched this year, my decision was made after the two summaries. With very limited instances, there were instances of the second speaker completely messing up final focus when they were ahead after summary. I think those are the only instances where the final focus really changes the results of the round. But if one team is ahead after summary, all they really need to do is just repeat that summary. I think close any sort of new routes to the ballot that the other team might try to do in final focus. And sort of I think something that a lot of good debaters do that I think is smart is they sort of just straight up preempt it. They're like, there's no analysis on this point. Don't let them stand up and make new analysis about it in the second final focus, or calling out new analysis in the first final focus. I think really in this round as well, both final focuses didn't really, I think after Daniel's final focus, when I stood up, I was like, well, I'm going to be making new analysis if we're going to win this round. And I think that in general, the threshold that judges have for new second final focus analysis is pretty low, which is why the sort of implications of the new other responses that come new in final focus don't really change the outcome of the round. So I think definitely we never took prep time before final focus. We always just took all of our prep time before summary. If you're going to win the round then. You're not going to win the round, or I guess there's some instances of cool final focus strategies, but in general, you're probably going to win after summary.